Welcome, welcome. This is Luke Jawackum with Houlihan Lawrence in Bedford, and I'm joined today by...
I'm Michael Vrlaku. I'm a lender with PNC Bank. I've been doing this almost 20 years. I've helped thousands of clients, and I lend throughout the United States. Look, I did have one question that I wanted to maybe start this off with. I hope you don't mind.
Yeah.
You entrusted me to be your lender, right, and help your family with your financing and buying of a home. So I figured, why don't we start this off by just kind of telling the buyers or, public out there, what did you look for? What do you recommend that buyers look for in a lender?
So one of the big things was communication. I was able to call you on the phone, talk through things. I think everybody has a complicated issue. I mean, when you're going through the mortgage process, it can really feel like you're financially naked in some ways, and you're really sharing a lot of information from your taxes to where money's coming from and all of this. And to talk to your lender directly and be able to talk through some of those things, maybe some strategies and whatnot, and how the process is going to go was something that really stood out to me versus some of the other lenders I've called, and they just kind of ask for, debt, liabilities, what assets you have, what kind of income you have, and try to get you that pre-approval as soon as possible without building that connection and answering those questions kind of up front, because it can be a really scary process when you're just getting into it.
So one thing you said, speaking strategies. And, I remember talking through a lot of different scenarios with you. So, I think that goes to expertise, right, and experience. So maybe along those lines, you got to make sure that maybe the loan officer's been in the business for a little time, know what they're talking about.
Yeah, absolutely. I mean, we run into this with all different kinds of professions. To share a personal story, like even with airlines, you try to get from A to B, and maybe there's some sort of delay during your layover, and you get the person who just started a year ago, and they don't know how to reroute you in a way to get you to your destination. But if you've got someone that's been there for 10 years and they know how the system works, maybe you have to go a little out of your way, but you can get to that destination sooner. And I think that's true with lenders as well, is if you have somebody who can figure out how to get you into that home, rather than just plugging you right into a conventional kind of model and seeing you as a number, but really seeing it as a situation, as a puzzle to figure out together, get somebody who understands the systems. It can get you from renting to owning much quicker and in a way that you're comfortable with. So that was reason number one. Reason number two was you were competitive with your first-time home buyer grant that the bank offered at the time, as well as rates, closing costs, and trying to get me those calculations as soon as possible so I could know what I'm getting into. I mean, one of the things about closing costs, especially as a first-time home buyer, is you have your down payment, but on top of that, you've got numerous closing costs and things, and also you were able to get all of those to closing rather than paying an appraiser up front or paying for those services as we were going along. We were able to get that all in closing, all in one kind of scenario.
That's interesting. Let me butt in for a second, because I'm thinking about all the different conversations I have with prospective clients, and the vast majority of everybody, it's like, hey, what's your rate? Right away. I mean, a lot of my business comes from referrals, so it's a little bit more personalized. But just thinking about what you think is most important. First, it was the person. Mm-hmm. Second was the programs, the rates, right? Like what the lender may be. Yeah. So that's interesting. Why do you think that is? Why do you think that's more important than just the numbers?
Well, I think it definitely depends on the person, right? I think someone coming in with a jumbo mortgage, having that personal service, even if the rate might be higher or maybe the programs aren't all there, is really important for that person. Service, being able and willing to pay for service. But when I was starting out, not only did I get that service, but I also got the most competitive rate. So that was part of what really sold me on the program too. I got both sides, best of both worlds, so to speak. But I think someone coming in might shop around for a rate. Maybe they make the mistake of going to some sort of online lending program where you're not talking to the same person every time. You're talking to a call center, or whatever that scenario may look like, and maybe the rate's lower, but the service isn't there. And I felt like when I talk to you, I'm talking to the same person, I'm talking to the same team, and we're able to work through these really personal things together to get to closing, to get me my first house. And what was great was I didn't feel like I had to come out of pocket to make that happen. Versus there are some local lenders, but they're more expensive. I mean, you are a local lender, you're down in the city, but there's people in the neighborhood who maybe they could offer that service. They'll come to your house, whatever it is.
It has one side of it. They have
Right.
the personalization, but they couldn't necessarily deliver the same
But
terms.
your rate is going to be a little bit
Right.
higher because they're, a little more private wherever they're getting the money from. It's not a big bank or whatever it is. So, anyway, so coming from a personal standpoint, that's why you were my mortgage broker. But that also is reflected when it comes to being a realtor and who I recommend when I'm recommending lenders. Is I remember that experience, and I appreciate when we're going through a deal together, I can call you up and say, hey, does my client have the paperwork in? Like, is there anything that I can help explain to the client? And we're in that constant communication, because I think a lot of deals fall through when it gets into underwriting, and as the agent, you've got nobody to kind of touch base with.
Yeah.
And our relationship has definitely helped in some of the deals that we've done.
And what's really interesting about that is that I think that people in general, or most people, believe that if they got denied, and that's just that was just, I don't know, their destiny or something like that. Like there's nothing else they could have done. And then in those situations where there's a denial or a delay or something without the communication, there's really a big question mark of like, well, was this even warranted? Why did it happen? Why did it happen at the last minute, right? And then just kind of feeding off of what you're saying was important to you, you wouldn't have run into those issues with me, right? But to your point of the online lenders, when you have an 800 number with 7-digit extension, and they're 9 to 5 and it's 6 o'clock, and you have a very important question, or you need to know, like if you're going to make that closing, that's important, right? That's important to you as a realtor, and should be to your clients as well.
Oh, that's the most important. I mean, they're buying a house, and this is their next move, and maybe their lease is up and all of this, and maybe there's just a couple pieces of work, like just a couple things. And oftentimes, I mean, every deal is unique. So there's always something, right? And if you can't call the lender and say like, all right, how can I help? How can I explain this to the client? What can we do here? I mean, that really puts us at a disadvantage. And to your point, I mean, luckily I was never denied in my process, but there are definitely, when there are hiccups, you don't want that closed door. You want to understand. You don't want to just say denied. You want to like,
Right.
well, why?
Were there
what
hiccups
happened?
with your loan? Do you remember?
Say that again?
Were there any hiccups with your financing?
No, with my financing, it was
But
fine.
does that
We were all
mean
lined
that
up.
there were no hiccups, or
That's-
that you just didn't know about that?
That's true. That's
Right.
true.
And that's important. That's a big part of my job.
I mean, a lot of service on both sides, being a realtor and in the lending sphere, is like taking care of stuff and not making big deals out of little things.
I think it would shock and surprise people how many declines I receive from underwriters. And if I didn't, know what I was doing, a lot of those would end up in that same result. And it's just surprising that, buyers don't really understand that this whole process, and that when you speak to me, I'm not lending the money, right? It's not coming from the bank of Mike Vrlaku. It's whatever bank I'm working at. And the underwriters are really the ones who are signing that over. So, there's a lot more that goes into it. I think you maybe titled this show right there, There's Always Something, right? Mm-hmm. So on the lending side, it's got to be the same thing on, from your perspective as a realtor.
Yeah. So, so those are some of the things that I looked for when I was finding my mortgage broker, and also the brokers or the lenders that I recommend what are some of the things when you're talking to your clients and talking about real estate agents that you look for when you're working with a real estate agent and when you're looking to refer an agent to one of your clients?
Yeah, so unfortunately, I wasn't moving in your area, or else I would have chosen you. But so obviously, geographic areas is maybe important. But besides that, it comes down to the same things, right? It's the principles of communication. And I think for realtors, at least from my perspective, communication is also a good tell as to how much you care about things. Salespeople in general might be very communicative up front, but maybe not during the process. But I get to see during the process. So when we do a deal together and I can see how on top of the whole deal and the transaction you are, well, I know you also care about it, right? It's not like, oh, hey, this deal's signed. I know I'm getting a check at the end, so I got to move on, right? And that's important. So I can see behind the scenes. And so when I recommend a realtor to a buyer, it's because I see that they really work on your behalf, and I think that's kind of an overall understanding that buyers should get, or sellers as well, is that we work on their behalf, right? We have our interests aligned, and when we do, that's most important. And so caring, I think, is the number one thing for me. And then there are some agents that just are a little bit more knowledgeable than others, right? So when they're asking me questions that I'm like, well, have you done this before? Maybe I should be on the phone with you and the buyer, and we can talk this out. I can help you out. So it's that, right? It's the communication, it's the caring, and then it's the knowledge kind of second. I think those are the two main things that I think about.
Yeah, I think for sure, if you're coming to the process with care, you can overcome maybe a little bit of a lack of knowledge or a new scenario that you haven't, had before, because you're constantly in communication and you're figuring out what those problems are and you're looking for solutions.
Well, that's a good point. Like you figured it out, right? We had some early transactions early in your career, and I've been doing this a lot longer, so I've a lot to compare you to, and like the behind the scenes kind of comparison. And never did I think, hey, like he's really new at this, because you figured it out. If there was some type of hiccup or issue or something that's always happening, you figured it out because you cared and you were on top of it. And so from a lender, I didn't see a difference, right? So someone comes to your area, I'm certainly recommending you, and for those reasons.
Yeah, absolutely. And I think one of the big things is to not be so with realtors. It's really important. Geography, right? Like you should work with a realtor that knows the area, that's deep in the area, that's not driving an hour north just to sell a house. Like they should know where the grocery store is and how things work in that area. With a lender, I think it's a little bit more open, and even if you're moving to Westchester, I don't think you should be ruling out working with a banker that's in New York City, or something where there's a big financial institution and that power that can help with rate, that can help with the amount you can, there's just so many factors. Could you speak a little bit about the differences between a huge financial institution like PNC Bank and maybe a local lender, and what those differences might be? Sure.
And, just to start off by kind of touching on that geography part, right? New York is unique in its geography of probably from a real estate standpoint, from certain unique fees versus the rest of the country, especially for lenders, right? We have, mortgage taxes that, we have to account for on a purchase. We have to think about in SEMA transactions, how I can save someone. So, you take that buyer who is buying a home that's going to have a mortgage tax, but there's an existing mortgage. We do a purchase SEMA, save that money by assigning that mortgage. And a little bit technical, but I guess really the point is you might be able to work with a financial institution that can lend there, but do they have knowledge of there? Now, you think locally, of course they have knowledge, but for example, I said I lend in all 50 states. Texas is unique. And so if I was lending in Texas, I would hope that someone throws a couple curveballs at me, some hard questions. Let me at least explain and prove to you why I should be lending in Texas, because not everyone should just because they can. Mm-hmm. So I think New York is like that. And so what was your question? It was along the lines of lenders, big lenders and small lenders, mm-hmm. right? And so, well, it really comes down to the individual buyer as well. So if you are a very vanilla, as we call it, good credit, W-2 employee, well, you can go anywhere, right? So when you think about it, well, what's our sales pitch at some of these lenders, right? So you have mortgage brokers who might say, I can go to 170 different lenders, and they might pitch that from a standpoint of a lot of programs. They might also say, I can then therefore find you the best rate because I have 170 banks I can go to. But the reality is they can't go to every bank, and they might miss only 4 banks, but those might be the top 4 banks. And so if you're a vanilla, good credit W-2, you are a very easy mortgage, right? And so as a very easy mortgage, you want, like you said, the good communication, but you also need that good rate, right? You want good terms. You demand good terms. You're easy, right? The easy mortgage should have any, but we don't, like banks in general, don't have all the programs, right? We're not looking to be everything. And so, again, I think coming down to the importance of kind of your lender, and as we've had some conversations, I know up front, hey, this doesn't fit my bank's, guidelines and parameters. So this is what you might, look to do. And a lot of times I'm pointing towards brokers or what we call like correspondent lenders who sign up with a lot of different lending outlets, wholesale companies. And those are some of those unique options. So if you're a business owner and you've only been in business 1 year, or you have a lot of write-offs for startup reasons or whatever it is, right? You might not fit that conventional lending at a big bank. And you can talk to every big bank and get the same answer. You might be frustrated, but you're talking to all the wrong people, right? You need to talk to someone who has this type of creative financing that's around, your situation. And there's a lot of programs out there. A lot of it, I think what is most important to know is around income, is around, calculating income differently. And big banks are a little more straightforward.
So I think this really goes into my next question, which is, should your relationship with your lender end after the closing of that home? Or are there benefits to staying in touch with the person who you've been lending with and keeping them in mind? Are there reasons to stay in touch with you after the closing, or for you to stay in touch with a home buyer?
Yeah, I mean, I think this is going to come as a big sales pitch now, because I say this in conversations with buyers all the time. If you look at this as a singular transaction and I'm $50 more than someone else, you might think, okay, I am that vanilla lender. I mean, the vanilla buyer, right? And so that $50 is straight savings. I know I'm going to be fine, and you will be, right? You will be. But I keep in contact with my customers, right? They are, friends essentially, right? They're people that I have, that I, entrusted me with something so important, that so impactful to their lives, and I'm there for them. And so what does that mean? I mean, I'm there for them when rates drop. I'm there for them when there's questions, right? I work at a big bank. There's an 800 number to every big bank that I've ever worked at. But they call me, right? You have some issue that doesn't have anything to do with me, but Mike, I don't want to hold on. So, I mean, it's little things like that, or it's the big things. It's the big things when you're very busy in your career or with your kids, and you get a phone call and I say, hey, your payment is $4,300 a month. I can offer you something lower with no closing costs and save you X amount of money. And you're like, wow, thanks for thinking of me. Maybe they would have thought of it, right? They probably would have, but it would have been maybe 6 months down the road. And instead of saving $50, they cost themselves, $8,000 in lost savings. So it's like that. I think that is a big part of it. And I would say on another level, a lot of my more affluent clients will have high-level questions for me, right? Leveraging more than just that asset. thinking about investment properties, second homes, vacation homes, getting into very complicated questions, pulling in financial advisors and CPAs. And so, yeah, there's a whole relationship, and it should be, a relationship afterwards as well.
Yeah. And when you're building your net worth, leverage has to go into it. And when we're talking about leverage, I mean lending and having somebody in your corner from a bank's perspective who has gone through the process with you through a home buying experience and kind of has knows your background. It can help for that next home when you decide to level up. I know for me personally, you helped with the purchase of my first home, and now my wife and I are looking into our second, and just having already that knowledge of sort of my financial situation and where I'm at really helps us work together moving forward, and gives me some of or helps with you giving great, flexible, creative advice to make it work to benefit me, because you have background knowledge of my situation. With fire engines going on.
I think that siren should be going off in everyone's head right now, because, look, I'll take you from kind of throughout different lives, right? My clients will call me maybe, on their first home, and they're in preparation stage, and I'm looking at their finances, and I'm saying, hey, do this and this, and you can buy a home, right? So very simple, getting prepared to buy a home. So certainly I'm always open for that, right? I want to help them reach their goals. And then, like you said, maybe they do buy, and I stay in touch, and I say how things are going. And, I had couples that have said, well, racking up a little bit debt, I think my credit's low, what do you think? And we've done things like home equities, right? Home equity can consolidate debt. And so since I've been in this business almost 20 years, I've seen this whole life cycle happen from that first-time buyer to the time that we did debt consolidation, where they were struggling, right? They were making the bills, great people, and this really has gone for a lot of similar situations. But the debt consolidation has freed up enough cash flow that then I say, well, if you put that cash flow into investments, right? So some will save, right? They save for retirement with that money. Some will put it back into their home. So the cash flow savings, and then the extra interest, because you don't want to hold credit card balances. So you leverage that home equity to, use it as a financial tool to really right size both paying the lowest interest you can, and also manage your monthly cash flow, right? Mm-hmm. So you can save and pay down those debts. And so you take it to the next level. Right now we have your second home, third home, maybe you're advancing your career. I've had a situation where a person was buying, very, very affluent client, buying a very large home for a lot of money. You might not think this is like everyone's problems, right? I mean, we were talking about first-time home buyers, but even the wealthy run into the same problems, just at a different level. So I've had a client come to us and it's like, no, you can't do this, and I won't talk about amounts, it's a lot. And but we looked into the finances, right? And so we seen that the cash flow was too much to a yacht. And so we got with our partners and we refinanced the yacht, lowered that debt, took some money out, who then with that money consolidated some cars. I think it was cars, probably like a bunch of Mercedes or Porsches, whatever. Lowered that debt, mm-hmm. And then not only did we save the money on the interest there, but then that customer's qualified for the purchase of this huge home. And so a lot of people might not think, hey, wow, debt consolidation for a rich person to buy a mansion. Yeah, that happens. So it's really, I've done it all through that, but you really do leverage different financial tools for home ownership and overall, just being, healthy with your finances.
Yeah, and having a relationship with a banker and with a lender really helps with that, and knowing the different tools. So, I think a lot of people are the most familiar with conventional mortgages, 30 years, 20% down, and that's getting more daunting for millennials and people coming into the home buying process as homes get more expensive. What are some other financing tools that people can look into besides that conventional 20% down scenario?
Yeah, so what I would start by saying is that there's no one right way, because there are a lot of options and different financial positions and overall career positions like you might be in might just have a different solution that fits your needs better. Right? You might have the 20% and be better off. Maybe you can speak to this a little bit. Putting a lower down payment on a more expensive home that needs that work, then you take that money and you fix it up, and now you're like, all of a sudden you got the house that you really wanted, versus settling for something because you just changed your financial structure a little bit, And so there are lower down payment programs. There's what we call, piggyback loans. So it's like a first and second mortgage. So you get a first mortgage, you get like a home equity as a second, allows you to put a lower down payment, allows you to avoid PMI insurance, right? So when that scenario fits, a lot of times it saves people a lot of money, gives them more options. There are a lot of programs for affordable lending, for income or different areas that'll be even more flexible. Lower down payments as little as 3% down, and that's a non-FHA program that are out there. There are some, different industries will have maybe different programs for them. The teachers, the firemen, the military, right? Military is a VA loan, so that's pretty well known. But that's 100% financing. It can be at least, and then there's other programs for doctors and physicians, medical professionals, and that could be 100% financing as well and zero down.
How about there seems to be a transition these days from W-2 work to more gig working and self-employed, 1099 income, things away from the W-2. What kind of options are out there for small business owners and people that don't have a W-2?
Sure. So if I can get a little technical for a second, let me just explain first the understanding of how underwriting looks at this, right? In typical ways, we want to know how much you're making, going forward. And what you're making going forward, we want to look back and kind of make sure that supports it, right? So when you go to gig work, if it's a short amount of time, it could be 1 year, it could be 1.5. If you don't have 2-year history, traditional financing and underwriting methods might say you don't have enough history for us to project what you're going to have, right? We can't average it. It's just, let's just say it's a calculator without all the different, numbers to put in. Mm-hmm. And so if we can't do the calculation, we can't do the loan. You could have made $20 million last year, but it's been 1 year, and our guidelines say 2. And I'm just talking general terms. Some programs maybe is only 1 year. Mm-hmm. Maybe there's exceptions to it. But if you're not fitting that guideline, if you have changed your job and career to a different type of income structure, and I think that's most important, right? Because a lot of times there's a misconception of don't change jobs. Change jobs tomorrow, the day before closing, as long as you have 3 days before closing. Let us a couple of days to kind of verify it. But you can change jobs if we're verifying your guaranteed income. Mm-hmm. Right? If you're a W-2 salary, $100,000, and you move to another job, and maybe you move twice it doesn't matter. Like if you're guaranteed $100,000, and we verify that, well then okay, we trust your employer is going to give you $100,000, right? We're qualifying off that. If we can't do that, and you say something along the lines of like, no, it's pretty much. Don't say pretty much, right? That's we're not gonna underwrite to that, right? We have to really be able to project it through the historical on something that is a variable type of income. So your bonuses, your commissions, your self-employment, these are variable type of income. It can go up and go down. It can not be there, whatever, right? So we want to look at a 2-year history, traditionally, to be able to project that you're going to continue to have it, right? Otherwise, we're just looking at guaranteed income. So there are programs out there that will be a little bit more flexible there, right? And so if you came to me and you said, well, I only have 1 year, I might say, oh, well, maybe it doesn't fit big bank type of guidelines, but they're a program where we look at your bank statements only, right? Everyone heard the word stated, right? Stated mortgage. That's where a lot of the last financial crisis came from. Everyone was just stating what their income was. Well, now it's stated in some cases, but also proven as well through kind of bank statements. So there are some programs out there, mainly, again, some of the smaller broker banker type of correspondent lenders have access to. But, at the same time, you're probably paying a premium for this, right? So you might ask yourself, well, why wouldn't I just start with that lender, right? Because I don't know necessarily. So, you might come to me and you say, and I say, you know what, I'm sorry, it doesn't fit. But how about if I did say it fits? Now you might have lost out on kind of like my terms versus someone who had this more flexible program. So I think depending on what your income structure is, you might want, to compare the bank, the broker, something like that.
So at what point in the process should they reach out to you or a lender?
Today. I mean, right now everyone should reach out, because if you have any questions, any plans to move and buy, the market's always changing, whether it's interest rates or programs. It's probably something I could talk to everybody about, unless you've been in the business, right? There's something, whether you're a homeowner and we can look at your finances and kind of plan a strategy, or if you've already had the strategy, call me when I always say, at least call me before you leave your home to see, a home, right? Once you get in the car, with you, they should have this financing kind of all figured out, right? Because, again, and you might have seen this, but I've seen a lot of people call me, Mike, I love this house. You got to make this work. And every single time I try to stretch it, I'm not conservative. My normal conservative method and thought process goes out the window, because now I already know you're invested. And like I said earlier, like now I'm invested because we're on the same team, right? And so I don't want that. I don't want to be put in that position. I don't want them to be put in that position. I'm put in that position, like right now I'm thinking of somebody who's in that position. And that's not fair to anyone. So, in this situation, I said, don't put us in this position. Let's get all these documents up front, And what they do, they went to a home. They loved the home. That's too late. No. So, it's never too early. Sometimes I get these calls like, I'm going to do it in a couple of years. Don't apologize. Fine. Let's just talk about it. What do you need to learn here, right? What kind of strategy could we put in place that will help you?
Yeah. Well, they always say luck is when preparation meets opportunity. And if you're in constant communication and talk to a lender today, that can really tee you up to meet that opportunity. Especially in the last year, if you waited a weekend, you've already lost the house, right?
Right.
And although competition is a little lower now, we still have low inventory, and those ready to move in houses are still going quick. So if you don't have your pre-approval, if you haven't gotten through the process ahead of time, that really puts you at a disadvantage when you do find that house. And I do want to share a personal story. So, my wife and I saved up a bunch of money, and I still had student debt. And initially my thought was, I'll pay off the debt, use the rest for the down payment. But before I did that, I called you and we talked, we had that conversation. You said, well, hold up on paying down that debt. It might be more beneficial to see this large bank account for qualifying versus eliminating your student loans. And that's what we did. And we were still able to, we're still able to actually pay off my wife's debt after we bought the house, but we waited, and I think that helped us qualify, especially as a self-employed person. My wife had a W-2, but making those choices, people think they know already. Like I thought, eliminating some of that debt was going to be my best move, but that wasn't. And
that's a key. That's the key, is that it's obvious, right? It might be like obvious in some way. In some mindset, you can make an argument that you're making the right choice because, paying off debt, what's wrong with that? But when you talk to me, I'm like, well, hold up, because there is a different way that we're going to do these calculations. Not everyone knows these calculations. I mean, they shouldn't know. No one should know the calculations that I do, right? That's why I'm good at it, right? Even loan officers, they don't necessarily do all the same calculations or understand, the different options that someone could do in preparation. And so, but it's not because you were wrong, right? You were just wrong for what your goal was, or potentially wrong, and that I probably left it open as to let's find out, right? Because even I might not know the end result or the exact direction. Sometimes it starts with, hey, let's explore this. If we don't pay off and we have extra money, does that help us? Or if I use that extra money and pay it off, does that help us? It can go both ways.
Well, what the best thing is I didn't understand closing costs. And that having that extra money in my bank account, I think really helped with paying those, not only just paying them, but qualifying that I had more than my down payment to pay for closing costs. Can you talk a little bit about what closing costs are, what people can expect, and maybe rough estimates based on, so I always tell my clients it's 2 to 8% of the value of the home, of what you're paying for the home, is what you have to budget on top of your down payment for closing costs. Can you run through a little bit of what closing costs are and what people should prepare for?
Yeah, I think that's a good guideline, right? The 2 to 8%. I always try to say estimate high, right? There are calculators out there. It's hard to give you more direction than say, do the calculation. There are calculators out there, right? Whereas I say, let me help you with some things, but estimating closing costs is just a simple calculation that you can find out there. So do this early, right? Don't be surprised about it, later, because different counties, different states. There's different amounts. You go above $1 million, you go below $1 million, right? So different things can impact it, and that's something that if I was some of my clients and I didn't necessarily know that much, I would rather them teach me to fish kind of thing, right? Than give it to them. So I would just recommend find a calculator, right? Know what that amount is, because that amount's not going to go away. Now you can, maybe speak to like negotiating seller credits and how you might be able to include some of the closing costs in a purchase. Are you seeing that now?
Yeah, so there's a lot of different, and this is actually something I wanted to ask about too. So one of the strategies that people have used now that there's less demand, instead of bringing their price down for their home on the selling side, they might offer to pay a point or something like that. Is that a viable strategy? Would you advise for that for a seller who doesn't want to bring the price of the home down? They want a high offer, but they're looking for new negotiation tactics now that the market's not as crazy as it was. From the lending side, can a seller pay a point to the interest rate for a buyer?
Yeah, sure. So there's all types of seller concessions, right, as you know, and I think for buyers out there, they need to understand, well, a seller concession is kind of still your money, right, because it's coming off the top, and so one way or another, you're paying for it. Mm-hmm. So that's first and foremost. I think that has to be established. And then I guess I'm going to, just when you brought it up, the first thing in my mind was this new buy down thing, right? Hot topic in financing, I got this buy down program. So let me go into detail what a buy down program is. And to your point, it's like paying a point, in some ways. It's that. But when you use this buy down, right, and it's like, oh, interest rates are high, but my seller's paying for it. No, you're paying for it. Right, and the way that you're doing it is, let's give two scenarios. Someone's buying a home for $800,000 in your area, and they're gonna do this buy down. Now you have a good rate. Now you're happy. You're like, all right, I got it. So maybe the buy down costs the seller $15,000, right? Because it's a big mortgage, something like that, right? Mm-hmm. So seller is gonna basically have to eat $15,000, right? And so when you go to closing, that's all credited and everything. So now you close, you got $800,000 and you have a lower interest rate. So you might be happy. Now, in 30 years, that might be great. You might be like ecstatic that let's back up. So let's say rates never come down again, right? Mm-hmm. They go through the roof. They are so high, or they go to 7 and government says it's never changing. We're just going to keep it here somehow, whatever. Theoretically, then your buy down absolutely is awesome. Makes a lot of sense. But if you're listening to the forecast and we're talking about, interest rates being, inflated now, but once inflation goes away, rates can come back down. And that might be only a year, 2 years, 3 years, 4 years, right? The shorter that time period is, the worse that decision became. And then, if it's a bad decision, try to understand the numbers behind it, because for the person who takes that buy down, that $15,000, and refinances in a year, there's a number to that, like what that $15,000 you've chosen to save $1,500, and you paid $15,000. Right, there's a calculation there. And then another reality to it is that seller could have just handed you the $15,000, right, instead of giving it to you to buy down the rate. So, I've had buyers who said, I don't want to pay any points. And those same buyers then take a seller concession for a buy down. And that's a misconception. I mean, they were totally confused. Someone sold them on this idea, because that's exactly what they did. They did exactly what they said they would never do, because in one mindset they were like, oh, no points, it's a bad deal, no points. When we talk about points, I always say this, well, how much is points? Like, it changes. It's not one number. So how do you know if something that changes is good or bad? Right? If I say the rate's 6%, but I'll get you down to 4 for $10,000, maybe that doesn't sound good, but maybe it's $1,000, right? I mean, if you come to me, all right, someone like me, and you say, I don't want to pay points, well, maybe no one presents it. Me, I push back. I present it. I don't push it. I push the presentation of it, and I say, you make your own decision, but I want you to make an informed decision. I want you to understand the numbers behind this decision. I don't want you sold on a seller's going to buy down your rate. You're going to get a great rate, so there's no reason to wait, right? Because for their financial position, they might need to do some work on the house, right? Maybe they just should take the $15,000 instead of buying on the rate. Especially, that same couple might think rates are going down soon, right? So if you're under that belief, then you kind of disagreeing with yourself.
Yeah. So with a 20-year career and all the success you've seen, what are some of those highlights that you've had over your 20-year career? We were talking about Tom Ferry before we got on the recording. Can you speak to some of those highlights that you've enjoyed in your career?
Yeah, I mean, on that side, I mean, just Tom Ferry was great because, so Tom is a real estate coach, and he somewhat coaches mortgages, not really, but I was lucky enough to work for Bank of America, who was the only lending sponsor there, and I giggle because a lot of the lenders didn't want to even participate. Me, I was all gung ho. I'm like, first of all, I'm going for free. Great. I get to pitch these realtors with, and try to build some relationships. Great. We're talking about, I had some opportunities to speak to everyone. So great. So if you're seeing this, you probably remember that if you're a realtor. And so, but it also taught me what's important to agents, how they go about their business, right? Some fundamentals. So, I had a lot of takeaways. Plus, I went to Vegas and, some other great places.
Yeah.
So, those are certainly some of my highlights.
Great. Mike, thanks so much for joining us today. Where can people follow up with you if they have more questions about mortgage and financing?
Sure. Thanks for having me. I'm not hard to find on my Instagram, my TikToks, and I probably a YouTube channel. You have my link to my bank, but I also just post my phone number, so feel free to text me, call me, email me. Like I said before, any question's fine with me. I like to guide people, whether you're already in process with someone else and you're curious to, you're really looking for someone to help you. So.
And what is that Instagram name?
So I think it's just my name. I don't know if I looked at Michael Vrlaku, right?
How do you spell that?
Yeah, right. So Michael, M-I-C-H-A-E-L, Vrlaku is V-R-L-A-K-U. Yeah, that's probably the trickiest thing with working with me is spelling my name right.
Awesome. Thanks so much for joining us. I hope it was helpful and informative for your next home purchase.